General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. What's a bearish week? Which models hit? Which missed? Let's go here. Let's clean this up. So let's see. What profile is this? It's not textbook. Okay, how about Tuesday? Alright, they do have classic sale day. Also, weekly profile logic. Tuesday was high of the week. Wednesday, classic sale day again. Thursday was chop. Friday was TGIF. Time 2 this week. And alright. And TGIF logic played out as well. Discipline, patient, confident. Getting better with taking the setup in line with the idea. Case study log. Case study this week. Experience earned this week. Skills sharpened. Lesson locked. Diving into the macro perspective of the markets. I have the technical Next week improvement focus. Base hits. Staying low key. Charts. We need the PO3 charts. And we only got the two. I think UJ would be a good swing trade. I just don't. Oops. Okay, I was gonna say I messed up my mic. One in here. Alright. Let's go here and then let's go here. Clean this up. Monday came through. Apply default. It wasn't like no. Everybody had this magic level for it to drop. I think they thought it was gonna go up. It was like, oh, the buy is gonna run. We're gonna miss the dip to buy, and then it just starts dipping forever. Let's look at this one. Man, it's like we came back to like 50% of this. All right, so let's put this with like a purple line to match that box and make it an arrow. Hold on, wait. And this one is kind of right at premium. Did we get this, huh? Yeah, this is terrible. This needs to be ran as far as just delivery anyway. Let's get these charts. It's not a clean PO3 chart. Ugly. But I noticed the sale days, especially the big sale days, look like this. No retracement. And very choppy when it is not dropping extremely fast. That's like Forex. I mean everything. Like a fear-based drop. and then it chops. Yeah, just the observation, but the ESLs look terrible. Looks like a 4XL. Oh, yeah, they both look terrible. Wednesday was a little bit better here. This Wednesday was Jack. Thursday, about the same amount of chop. Okay, let me get the link. Same amount of nothing. SPX. No, the speed of the recovery until money leaving tech is making Nasdaq a laggard. No big notes or thoughts. What's today's date? 2/7/26. All right, that's that on that. Y'all have a good day. Peace.